Hello everybody and welcome to this week's Markets to Watch from Smack the Markets for week commencing the 26th of April. So as we move into a new week, again we've got a relatively light schedule on the news front. So a few items from Euro today and also the US at lunchtime, and then a pretty clear afternoon. Having said that, again we've got the common themes developing with the US dollar weakness, the dollar having its next leg down its recent leg down I should say, on Friday evening, and again continuing on early trade on Sunday this week as well. So let's take a look at a few markets here that we're keeping an eye on and some of the opportunities and potential markets to keep an eye on this week. So with that common theme of US dollar weakness, we might take a look at some of the dollar pairs, and markets like the Aussie and the Kiwi, they're strong this morning. One market that's particularly strong is the Great British Pound. So some of these markets against the US dollar are going to have strengths and weaknesses supporting them, and again the trend structure is not looking too bad either. If we come across to the the Aussie first of all, and you take a look at the Aussie dollar, you can see that the market's been sort of rather contained within this sort of range here for a while, and now price is now pressing up against this sort of level here, which is around that sort of just underneath that sort of 78 area. It's around sort of 77,500. We've got a market that's now starting to sort of push through that level. You can see that a little bit more clearly on the lower time frames that we start to come down to. So here on the daily, you can start to see that the market is now breaking above this level that has been containing the market here for quite some time. So above this price action, above this level, the market does really start to open up for some decent sized potential moves to the long side, and possibly maybe even a continuation up here towards that 80 level. So again, we can come down to the 4-hour time frame. Again, you can see our 77 sort of 50 area here. Once the market sort of gets above this area, we'll start to look for potential opportunities to trade strong Aussie and take advantage of that weakness in the US dollar. A lot of these other dollar markets are looking fairly similar. So the likes of the Kiwi dollar here also looking fairly similar. The market's been contained underneath a level for the past few weeks. It's now starting to break above that level again. Even on the weekly chart, in the context of a trend, if we consider this low where the market sort of bounced off the 69.50 area, you can start to see that if the next move, if this trend is going to continue, then we need to start sort of pushing up towards the highs up here, and that's a fairly decent sort of run to the long side. Even coming down to the daily, again we can start to see fairly reasonable trend structure starting to form here again, with geometry starting to come into alignment as well. So if we come over to the index markets now, take a look at the Dow. Now these US index markets, they've been up and down like a yo-yo over the past sort of week or so. You can see the Dow here. I still think that these markets have got there's plenty of news that is going to be coming to the markets that is likely to be a bit more sort of supportive fuel for these. Having said that, as you can see, price action has been rather sort of choppy, and I wouldn't be at all surprised to see a continuation of that sort of choppy price action. From a technical perspective, these markets are looking sort of fairly stretched on some of these mid to lower time frames, and could easily be due a bit of a retracement. Having said that, with earnings coming out, positive earnings and positive sentiment, as well as stimulus checks as well, all these things are sort of rocket fuel for stock index markets and do support them to the long side. So whilst the long-term perspective of these markets may well be for a bit of a decent sort of pullback, sometimes these markets can continue to push on again, against all odds, as well as particularly when there is got the right ingredients trickling through into the market. Now all of these markets, the Dow, the S&P, the Nasdaq, all starting to look rather interesting here again. Our perspective on these is to trade these on intraday time frames and look for those opportunities once the cash market is open. So the sort of thing that we'd be looking for is retracements back into value areas, looking at key structure levels, and key decision point areas as well. So coming over to commodities now, we had some nice moves on and nice trades on gold last week. One that we didn't manage to really sort of get positioned in was silver, and silver still looking rather interesting around this $26 level. So if we come and take a look at silver, you can see that last week the market just really contained itself around the $26 price point. We've got this trading window from 26 up to around that 28 area, and it's not quite a nice sort of size trading window there. Again, in the context of the trend that we're starting to see develop here on the daily time frame, if this market is going to continue its trend to the long side, the 26 area could be a nice area here of potential support. So we're keeping a close eye here to see if the market starts to develop strength to the long side, and start to look for maybe positioning if this trend starts to continue. We've got a fairly decent sized trading window there to the long side on this market. So there's a few markets there that we're keeping a close eye on going into the beginning of this week. I certainly hope it helps, and look forward to speaking to you next time. Bye for now.